Hello, everybody. I'm Brian Elders. I'm one of the partners in Black Manta Capital Partners, and I'm pleased to have a chance today to speak again to Paul Morrison and Jan Hybler, who I met last week in Berlin. And last week in Berlin, we discovered that we had legs, and we discovered who was the tallest and shortest of us. And I can tell you that I am not the tallest. But anyway, the guys are co-founders and directors of UK Comuniiity Homes. And UK Comuniiity Homes is funding a project called Lares Digital Bonds, which is an offering that you will find on the Black Manta website. So I thought it'd be great for investors and brokers and others to hear from the horse's mouth about what these guys are doing, what the project is, where it's going, and what the proceeds are going towards. So without further ado, welcome to Jan and Paul. Good to have you here today.
Hello, Brian. Good to see you again.
Thank you, Brian.
So
I think we established that Jan was the tallest of us.
This is
with
true.
Legs. And it was good in Berlin. It was a good turnout. And lots of enthusiastic people asking lots of questions. Thank you for that.
Yeah, Berlin was good. And I hope that we do more of those things face to face as we come out of this crisis. So, so let's start off. We'll have a chat about, at a high level, what is this Lares Digital Bond? What is it funding?
I mean, if I take that one, the investment strategy focuses on residential assets only, and we focus on a geographical situation between the Midlands, Northeast and Northwest of the UK, all the way up to Southern Scotland. Our teams source and acquire tenanted properties in social housing area. So we look at studio 1 and 2 bed flats to 2 to 3 to 4 bed terraced houses. And from time to time, we find blocks of HMO accommodation. So we're perfectly placed to take advantage of the current opportunity on the UK market because there's such a huge lack of affordable housing, and we're going to take advantage of that.
Okay, so the real estate is one of the biggest asset classes that there is. Lots of opportunities these days. There's lots of different markets, commercial, different strategies, buy to let, you name it. This particular market that you described in the north of England and lower Scotland, the low income housing piece.
Yes.
Why is that a compelling opportunity compared to that myriad of other potential real estate opportunities out there today?
I think it's simply put that there's such a demand for it and a lack of resources. If you look at anywhere on the internet, you'll see there's a massive shortage of about 400,000 homes. And every year, this is getting larger and larger. And more recently, with higher unemployment, where we find a lot of people are unemployed and they're moving from more middle range housing to £300,000-400,000 down to the social housing level, which we see and which we're in. So the supply demand is greatly in our favour. There's a few other deciding factors why now. Interest rates historically were pretty low, so the borrowing rates are very cheap. So for our project, it's easy to get into the market, to borrow money cheaply. Interest rates are low. And last year, there was the elections, which stabilised, at least for the next 5 years, this marketplace. So with COVID-19 effects, unemployment rates, higher divorce rates, and all of these factors measure in why affordable housing yields such great returns. And to be honest, it's not a space that the institutional investors even look at because it's quite fragmented and they're used to buying an office block in the centre of the city. So to have 5,000 to 10,000 houses spread across the country, this is not something they can do.
Okay. Okay, so we have sort of unique opportunity set there, yeah? So
Definitely.
can I ask maybe a little bit about you guys? And, you know, obviously if there's an opportunity there, it needs to be seized, and it's you're the guys who are there to seize it. Can you tell me a bit about yourselves and why it is that you and the team that you have are best placed to take the opportunity?
I think the experience of any team is the driving factor of any business. Businesses will be successful or fail based on the people that are behind it. Personally, myself, I'm 30 years in various financial services. I've worked in Middle East, Far East, Latin America, and Eastern Europe. So I've got vast experience on various fund management, asset management, wealth management, bond management roles, and have held many different board level positions, which I suppose brings us why we're looking at ESG, and the G is about governance and having a C-suite that has massive experience, like a safe pair of hands, belt and braces approach. And that's what's important. So we've built the board level members around their experience.
Okay, thanks Paul for introducing yourself. My name is Jan Hybler, and as Paul, I've been in financial services for more than 20 years, real estate as well. Particularly, I have experience also in affordable housing in Central Europe, and have managed a fund with large amount of units in Central Europe that was focused on affordable housing. And that's one of the reasons why we also looked at the UK, because we saw similarities of the markets and the current opportunity. One of the key things of our management strategy is to have a actually formal investment committee, and the committee is composed not just of me and Paul, also experienced fund managers that basically served as expert committee members with some of the largest Central European funds and banks, which basically helps a lot in terms of bringing more experienced people to our team, and we believe it also gives credibility to the project and more assurance to the investors as well. Having such high profile, experienced fund managers on our team. I believe you should also mention that we've been in the UK affordable housing market for over 3 years now, and have deployed capital and acquired assets, whereby we have achieved the necessary low to mid-teen gross rental income returns, which are necessary to service our investor and bank capital. We have tested the market, and our goal overall is to acquire up to 10,000 units in the next couple of years, and the Lares Digital Bonds should finance up to 2,000 of those units in the next 3 years.
Very good. Okay, so we have the opportunity, we have a team. Okay, how can we maybe get just a little bit more low level then into it? You have, without giving away any trade secrets, something like that. How is it that you're going to execute this? What approach are you going to take to acquiring the assets and using them and exiting them? Yeah.
Not giving too much away, otherwise everyone's just going to cut and paste.
Yeah.
We've spent the last 3 years building, firstly, the management that are going to be controlling and overseeing and making sure that the corporate governance is controlled well to handle the money correctly. But more importantly, we have a team of people based throughout the UK. Now they're from property sourcing agents, letting agents, property managers, maintenance teams who can fix up properties that need some repair and some TLC, all the way to tax advisors, stamp duty advisors, lawyers to transact. Because as I mentioned before, if you're buying from auctions, insolvency agents, websites, Rightmove, real estate agents, you're buying from so many different areas, so many different, let's say, mediums. You need a team that can handle this. So our team is prepared and ready, and that's why we've designed the bond to raise the capital with which to deploy into the market. We already have plenty of portfolios and assets that we've analysed, and they have passed the suitability and appropriateness and affordability for our investment committee. And now we're just waiting for the funds to arrive, and we're ready to hit the ground running.
Okay, so maybe on speaking of investors getting in and things like that, what are the risks that are associated with this particular approach, and how are you managing to mitigate those? Like great opportunity, everything, but that's, how's that downside covered? Yeah.
I mean, from my 30 years of experience, I've only managed and understood risk. Everybody can be an Excel billionaire. What's important is to understand where it can go wrong, how to control it, how to mitigate it, and if it does go wrong, what steps are to be put in place. Now, if we're talking risks, residential risk, the biggest risk is occupancy. Now, I've already covered that there's a huge imbalance of supply and demand. So in our previous endeavours with smaller capital raises, we found that our tenants are queuing up, waiting to move in to our properties because there's a huge shortage. Now, whether people are employed or unemployed, the social housing level that we're in remains the same. So we find that some of our tenants will lose their job. From Brexit, from COVID effects globally, people are finding it difficult to maintain a job. But at our level, the government steps in, they offer housing benefits, and it's the same level as if they were employed. So that's great. And we get paid direct from the government. So there's no risk that the tenant collects the money and goes and spends it on fun and games.
A very unusual kind of a segment of the market whereby the employedness or otherwise of the tenant doesn't really matter because it's at that point of the market where the government intervenes.
It's affordable either way. I mean, the risks that we talk about, the pricing risk, we are buying property cheaper than developers can build it. Even if a developer gets the land for free, he physically cannot build the house cheaper than we're buying it. And typically we buy property with tenants already inside. So we find a portfolio, we buy it today, and next month we're getting rent. So in terms of void risks, occupational risk, property price risk, they're the main key factors. And all of those we feel are adequately managed and adequately controlled by our investment committee.
Okay, Paul. So we talked a lot about the risk just there. We want to look at the whole ESG and social responsibility side of things now. So before we get to Jan, maybe you could just give us a little bit more on this whole social responsibility piece, how it is exactly that you're delivering it, who you're working with, and what sections of society you're delivering for.
Okay. I mean, it's important to myself and Jan that the reason why we started the project was about giving back to the community. Now we're engaged with the councils, housing associations, charities, and the like to source and find withered, disrepaired stock. There's streets and streets in the Midlands and up north that are not being tenanted because nobody wants to fix them up. Nobody wants to house them. So we're engaging with the county councils to arrange some cooperation where they can provide us the stock. We can then fix it up, get it up to lettable standards. And then the council is shouting out for vulnerable housing. There's immigrant housing, battered housewives, ex-offenders, vulnerable children, and the like, that need safe, secure, and comfortable lifestyle. So I think for us, it's about working hand in hand with the local communities and making sure that we can get this old stock looking new and getting tenants in that can benefit from it.
Okay, well, I think, Paul, we've heard a lot from you, so I think we need to turn to Jan and talk a little bit about some of the ESG.
I have to rest my frail voice. Thank you.
Indeed. And in the documentation, if anybody is reading it, they might notice that community has a very deliberate misspelling with 3 I's in it. So maybe, Jan, you could just give us a little bit of background on these on the ESG angle that we have here, yeah?
Sure, thanks, Brian. We actually get that question a lot, so I'm glad you addressed it. 3 I's stand for impact, innovation, and income. Now, if I take the first I, impact, it revolves around social responsibility of this project because me and Paul, as entrepreneurs, we believe in giving back. And the first part of this social responsibility aspect of our business is actually making sure that the tenants enjoy a nice space, which means that once we acquire the assets, we make sure that we if needed, we refer them to above decent home standards of the UK, because we found that a lot of the owners of properties don't actually manage them well, and the tenants can't afford them. Basically can use them in a nice way. So we make sure that basically that they're well kept and maintained. That's the first part. But then we take this further and we actually go and talk to local councils to see how we can improve basically, the general well-being of our tenants and of the neighborhood. And we have plans for employment of basically unemployed and former military personnel into our property management and repair teams once we scale up the business. And as well, we basically are always finding out what the concrete local council needs, what do they suggest in terms of improving the local living conditions. And our long-term plan is also to give basically donations to local schools and as well as the homeless shelters. So that's basically the impact part of our business, and it's really important for us as a long-term thing of our business. Now, in terms of innovation, basically this comes from our background of also technology and innovation, where we always look at, let's say, an old asset as real estate, and we try to basically bring new ideas to it. I'm sure you've heard about various prop tech ideas in the startup world. So what we're planning is basically using renewable energy on various of our assets to basically go with that trend. Also looking at various energy efficiency options for the various houses, but also looking at the property management side from a tech point of view, and looking at various apps to streamline property management. But not only that, we're also planning, and we have a vision to build an investor app. So basically, our investment partners can track the various portfolios we acquire, and they can see actually live how they perform. So that's generally part of our innovation strategy. Is income, and this is what Paul already mentioned, which means we're not property developers. We don't, engage in let's say a more risky, greenfield project development, or basically even some riskier conversions. We typically buy existing properties, apartments, HMOs, houses, which are usually tenanted, and we make sure that basically we can receive good income from those properties, stable income from day one or from the next month once it's rented. And this is really important for our financial partners, i.e. the investors, but also the bank, to make sure there's enough cash flow that can service the various basically coupons and debt. So that's the income side, and that's really important as well. That it is one of our main focuses. So that's impact, innovation, and income.
Very good. Before we finish, I think we should address the digital bond versus any old bond, and why it is that you are looking at this particular innovation and where that might lead in the future in particular.
Clear. In terms of the digital bond, it's basically, it goes again with our innovation philosophy. We believe it is a future. We believe that there hasn't been basically much innovation in the fixed income industry, and the digital bond actually goes well with our project, because our project is based on steady cash flow, and the digital bond can provide steady cash flow to the investors. The underlying project is not a development project, but it's basically rental income project backed by real assets, meaning also social and affordable housing properties in the UK. And we believe it could be attractive for investors because to buy and own property and manage it is not always easy, and that's what we do. And we're able to share that with the investment partners, I believe, in an innovative way where they can always see their the digital bond in their basically account. And it is also, I should mention, it is also tradable after some time. So in effect, it becomes a more liquid instrument rather than basically having your own property, which is not always liquid. And we believe we give competitive returns to investors in terms of the yield, even if they would buy it themselves, because we use economies of scale.
It's more of a risk return. If you look at the risk imposed on what we're offering versus the return, then we feel that it's a very finely tuned balance that people can accept and enjoy.
Okay, great, Paul. Before we finish this, what I'd like to do is I'd like to just ask you, can you just explain to us why this is a fantastic opportunity for investors? What is it that is, financially powering this? Why is it so exciting?
Well, I think it's back to what I mentioned before about the risks, which we've already covered off. But one thing that we didn't mention is that from the Midlands to the Northeast, Northwest, South to Scotland, we're buying tenanted portfolios at double-digit yields. Now, if you look in London, they're at 3, 4, 5, 6, if you're lucky. And when we're cleverly choosing and handpicking our portfolios, and with a bit of clever bank finance, we can look at mid-teens returns, which, of course, comfortably achieves what the investors are looking for. So it gives them comfort. And that's why we've designed this dashboard, so they can be month by month following the progress of what we're doing, how we're doing, and how comfortable we are achieving the goals that they expect.
Well, thank you very much, guys. It's been an absolute pleasure to meet you again on Zoom.
Yes, thank you, Brian.
I look forward to meeting you again in person in the future, hopefully up in the Midlands and the north of England, maybe in some of the properties.
Yes.
And where we can examine, Jan's great height once again.
Exactly. Great.
Thanks, Brian. Thanks, Brian.
Thank you very much for your time, Brian.
It's a pleasure. We will include some links to the website and to the opportunity so that anyone who's interested can go there. And thank you very much, guys. Have a great day.
Great. Have a good
Thanks.
evening. Bye-bye.
Bye.